Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model review for Friday the 15th of October 2021. Time is coming up to 0440, 20 to 5 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, what have we got then? We've got yesterday's flows. We've got a negative unopposed driver in the yen at minus 169, no backdoor flows. The opposing positive flows mainly going into the pound plus 91, euro plus 53, and the dollar's the positive rock at plus 25. Activity plus or minus 169. And this is the common theme. So intra-week then we've still got this negative unopposed driver in the yen at minus 703. No backdoor flows. The opposing positive flows mainly going into the pound at plus 372, into the euro at plus 254, and the dollar's the positive rock at plus 77. Activity plus or minus 703. So over the week and yesterday we've got this very weak yen driving to the exception of all else in the majors, no backdoor flows, and the bulk of these flows are going into the pound and the euro, with the dollar hanging in on the positive as the positive rock. Intraday then, this is the Asian session to about 15 minutes ago. Again, we've got this setup. We've got a negative unopposed driver in the yen, minus 91. Front, no backdoor flows. Opposing positive flows mainly going into the pound at plus 46, into the euro at plus 40, and the dollar's the positive rock at plus 5. Activity plus or minus 91. Right, so we've got this common theme of dominant yen weakness, and the flows are basically going into the pound, into the euro, and a little bit into the dollar. The dollar's hanging in on the positive. Right, we'll stop it there and write up the flows. Right, we've written up the flows then. So the euro's strong except against the pound, the CAD and New Zealand. The yen's weak across the board. The pound's strong except against the euro and the CAD, the New Zealand dollar. The Swiss is weak except against the yen and the dollar. The CAD is strong except against the New Zealand. The AUD is weak except against the dollar, the yen and the Swiss. The New Zealand is strong across the board, and the dollar is weak except against the yen. Right, so what have we got? We've got yen weakness yet again. And we've got New Zealand dollar strength. We've got the dollar weak except against the yen. So that's basically the dollar's pretty soft. And where else? Let's have a look. Yeah, and the CAD is strong except against the New Zealand dollar. So basically you've got New Zealand and CAD strength. Where is it? Dollar weakness and yen weakness dominating. Right, and take your pick in the middle. What's going to knock it about then? Let's have a look. So EUR council meeting today. Sure, that's very interesting. And US retail sales and Michigan consumer sentiment. They're the main events. Sunday then we've got New Zealand CPI, and then Monday we've got China GDP. Just to over the hill on Monday the 18th, China GDP. So that boxes us in. We'll stop that there, write up the asset classes, and then do the analysis. Right, we've written up the asset classes then. So US dollar index, basically the dollar index pumped up, it's come back, it's 0.25 from the high. So it's come off 25% from the modelled high. Gold, as you know, probably likes a softer dollar, and it's now half marks. So it doesn't like it that much, but it's half marks. That shows you where the dollar is, relatively speaking. Oil then did this massive break. It's been messing about. It's now steadied off at plus 0.38 above the resistance. So it's broken nearly 40% above this model resistance. So oil's pretty strong, steaming. Wall Street, S&P Tech. Right, they've all got this sort of chop up, chop down, and now they're starting to recover. And Wall Street is 0.29 from the high, S&P is 0.31 from the high, and the tech is 0.45 from the high. So that's they're all above half marks now. So the recovery has happened to a certain degree. and the strength is in that order, actually, the batting order. So Wall Street is the strongest, S&P next, and the tech is lagging at 0.45 from that. So it's just above 0.55 from the floor, 55% above the floor. Right, US 10-year in the bund, they've all got this this bounce in price, so yields are coming off. US 10-year 0.24 from the floor, 24% above the floor, bund 33% above the floor. So again, you're looking at relatives here. European yields are now starting to be weaker than US yields. Right, so what else we got? Copper messing about, and then it's come up to this high, and it's done this gap break. It's plus 0.25 from the resistance, so it's gapped 25% basically above its recent resistance. And US steel bumping along the floor, but it's grinding up. It's 0.22 from the floor, so it's 22% above the model floor. Right, get rid of that, and then we'll do the analysis. Right, so today, what have we got? We've got, apart from this European Council meeting, who knows what they're banging on about in that, but we've got this, what is it? I've even forgotten it. US retail sales, yes, US retail sales and Michigan consumer sentiment, right? So bear in mind that that's happening today. So let's have a look. Look at the complexes then. So dollar, euro, yen, pound in the majors, and then you've got the CAD, AD, NZD, and then the Swiss. Right. So just to grab that. So the yen then has been this continuous negative unopposed driver all this week basically. So the yen is being sold, and equities are coming up, sort of arguably sort of carry trade on steroids. And the dollar index and the dollar basically is starting to come off here. Right, oil on the CAD, oil is punching very high, and the CAD's like it. New Zealand dollar, if you look at the flows in the Asian session, and you can see that the New Zealand dollar and the CAD are strong. So basically you've got New Zealand dollar and CAD at the top of the strength range, and then you've got the yen and the dollar at the bottom of the strength range. So that sort of boxes us in a bit as well. So the basic question then is this equity push going to continue? Now equities have arguably wouldn't have liked this earlier taper, but nevertheless that would, you could argue that's been pretty much factored in. If you look at the equities, they've been chopping around near the lows, below half marks for quite some time, and now they're starting to come out the hole. So equities, there's not much stopping this yen weakness in the equity transmission and the yen. So it's likely you're going to see this continuous. What's going to spoil the party possibly? Well, US retail sales, fairly large component of GDP in the US, and therefore that has potential to spoil it. But the general trend is very strong in terms of ramping up equities and the negative yen transmission. And the likelihood is if you get this sort of you're going to get this sort of yen dollar on the negative and euro pound on the positive in the majors. That's the sort of scenario we're working on in the markets at the moment. And then you've got this disconnect in the AUD. The AUD is soft, and yet commodities are starting to come up. So AUD may not stay soft. So AUD quite likely to hockey stick. So watch out for that. And the NZD is just doing the usual run to the NZD when in doubt, which is seems to be what the market likes. And the CAD, assuming that we don't get some sort of fall off in oil, and the likelihood is we're starting to move into this sort of this imported inflationary phase, and so you're likely to get oil going up further, the CAD being strong, and then eventually the AUD will have no choice but to go up. So you're going to get the commodity currencies coming up. You're going to get further yen weakness. How much yen weakness is? I mean, where are we in the cycle for the yen? Well, it's got further to go. We had about, I think last week it was about, as a complex, it was about minus 500, and what are we now? Minus 703. So we're 1,200 points in the complex over 2 weeks, and it can go a fair bit further. It can get up to around the 2,000 mark without any problems. So that's on the yen. So we've got what we're 1,200. So we've got 800. So there's a fair bit of rope left on the chain. So I would suggest you might have a little bit of a wobble, depending what happens in US retail sales and Michigan consumer sentiment. Then, assuming that that's not disastrous, you're likely to see a continuation of this, and into next week as well. So basically, you're going to get yen weakness, dollar weakness as well off the back of the risk on. Commodity currencies coming up, and the Swiss should be soft. And the pound and the euro should be soaking up the positive flows. So business as usual for that. So I hope that was useful. See you tomorrow for the data review and the data cycle. If not, see you Monday for the normal FX review. So thanks for watching. Goodbye.